Hello, welcome to Geojit Spotlight. The recent market correction has brought down the Nifty by 6.8% from the peak. This correction has been triggered by mainly two factors. One, the massive and sustained FII selling, and two, concerns regarding poor earnings growth in financial year 2025. It is an established fact of market behavior that the very high valuations and very low valuations cause corrections that ultimately lead to valuations in tune with long-term averages. This reversion to mean happens inevitably, but the timing of the correction and the trigger for the correction are difficult to predict. The FIIs have been on a selling spree in October, having sold equity for rupees 89,255 crores up to and including 22nd October. This massive FII selling, which is an all-time record, has been triggered by the FII strategy of Sell India by China. The cheap valuations of Chinese stocks and hopes of revival in the Chinese economy and corporate earnings in response to the stimulus measures being implemented by China are the main factors behind the new FII strategy. As explained in earlier videos, this is likely to be a short-term tactical trade. Another factor that contributed to the market correction is concerns regarding the consensus earnings downgrade for financial year 2025. Financial year 24 recorded 26% earnings growth. This year, in FY25, earnings growth is expected to be a modest around 10%. So this is some concern. Many mid and small cap stocks have crashed. 67 stocks have crashed by more than 30%, 30. 18 stocks have crashed by more than 40%, 40. These momentum stocks had irrationally high valuations. Even in this market correction, large caps in financials, particularly in banking, like HDFC Bank, Axis Bank, ICICI Bank and Kotak Bank, and IT stocks like Infosys and HCL Tech, and telecom stock like Bharati, capital goods stocks like L&T, ABB and Siemens have been stable. Now the relevant question is, what should investors do now? Investors should wait and watch for the market to stabilize. There are opportunities that FII selling have opened up. Sustained selling by FIIs in financials, particularly banking, has made banking stocks attractive. Leading private sector banks are investable now from a medium to long-term perspective. Investors need not rush in to buy mid and small caps, which are overvalued even now after the correction. But there are opportunities. Second quarter results, Q2 results, and latest news relating to stocks like Zomato, Paytm, and IT stocks like Coforge and Persistent Systems indicate improving prospects for these stocks.